Good morning, everyone. This is Anae Augustini, CEO of CID Insurance Programs. Hope you're all doing well, and thank you for joining us. Today, we're trying something different. It's called an underwriter's work comp perspective. So we're going to sort of do an interview with an underwriter, our new business underwriter. So let me introduce Cesar Serrano, our new business underwriter for workers' comp.
Good morning, everyone.
And then I also want to introduce Jacob Cole, who's our marketing specialist. He's behind the scenes and makes everything work smoothly for you guys. So I'm going to get started. So because there's a lot of you on your end, everyone's on mute, so you're not able to speak, but you're able to hear. But very important to us is that you know where your chat room is over on the panel, and be able to type questions in as we go. Feel free at any time to type a question in throughout the webinar, and we'll stop and answer your questions as we go. So that's really important. I've got a few chat questions at the end, so please stay tuned, and we will have more to talk about then. So let's get started. Okay, what's really the objective today? And that is, this is a great opportunity to gather valuable information from an interview with Cesar today. He's going to really talk about what kinds of questions you should ask to gather the right information. There's some problematic mistakes that can happen with work comp when you're not knowledgeable or paying attention to certain aspects of the risks that you're evaluating to get a quote on. And then last, what are some of the best work comp classes of business that you can be the most successful with? So on to our interview. Okay, so now we're going to start with first thing. One of the most problematic things over the years I've seen in my 30 years in the business is named insureds, business ownership. So I'd like to let's get started with Cesar, and I'd like to know what all do all of the entities need to be listed on the policy, Cesar?
Typically, yes. If you have ownership in an entity that 50% or more in multiple entities, yes, they would all have to be listed on the policy. Not necessarily. If you have different types of businesses, but you have ownership in multiple businesses, and you have 50% or more ownership in them, you have to have them together with the same carrier. It doesn't necessarily have to be on the same policy, but it would have to be with the same carrier, because otherwise it would be considered a split risk. But yes, you would have to have all your businesses together.
Okay, that's important to know. That 50% is the key percentage for someone who owns multiple companies needs to be on the same policy. Also, some of the issues I have seen over the years, Cesar, is where you might have a DBA, but there's also a corporate. It's the DBAs that tied to a corporation or maybe tied to an LLC.
Definitely.
Can you speak about that as well?
Yeah, it's definitely very important that you have the correct entity name of the business and entity type, and not just the DBA, because it can cause problems, because you just have to have the right information. So you'll have to probe the insured to give you the proper information in order to get the most accurate application to us to be able to quote. Because if it's just the DBA, it's very difficult to try to find them sometimes, and there could be a problem where you write a policy and it's technically not that entity, and if there's a claim, it could be a cause to decline or deny a claim.
And it does get a little complicated with the Workers' Comp Bureau. doesn't it, Caesar?
It does. The Bureau monitors everything, so it's all reported through, each carrier reports back to the Work Comp Rating Bureau. Whenever a policy is written, they report back. They're monitoring everything from FEIN numbers, names, entity names, DBAs, everything. So if that's inaccurate, then the whole reporting process, the chain between carrier and the rating bureau can get messed up. And
It becomes a nightmare, actually.
Oh, definitely, yes. There's been instances of that where we've had an insured that changed ownership, and somewhere in the middle they didn't bother to tell us about it, and the Work Comp Rating Bureau nor the carrier knew that happened, and it ended up being that they returned all the premium back at the final audit because it wasn't the right entity.
Oh, interesting. That's a really good example. So that brings me to our last point: is how do the carriers handle? And I think this is probably a surprise to a lot of our retail brokers. But how does a carrier typically handle an ownership change with a company when they have a work comp policy in force?
It starts with a form provided by the Work Comp Rating Bureau. It's a 601 form, change in ownership, that has to be completed. That basically is a few pages long, but it gives you all the scenarios as to which there would be an ownership change that you would need to report. But yes, you have to report it to the carrier anytime there's an entity change. It doesn't matter if it's in the middle of a policy term or not. If there's a change of any kind, you have to report it, even if you're passing it from one family member to another.
Okay, so are there instances where the carrier is going to require the policy to be rewritten because of the ownership change?
Typically, if it's a full change in ownership, there's no relation to the person that you're selling it to. Yes, because you may or may not be keeping all of your employees as well. But it's just a complete change in ownership. There's no relation between them. The carrier is going to want to cancel and rewrite the policy with a new owner. Yeah.
Got it. Thank you, Caesar. This is really knowledgeable. This is very good information. So let's go to our next slide. So premise locations is like named insureds. It can be a problem when not all the locations are listed. So Caesar, what locations need to be listed on the policy?
Every location. It's really limited to an instance where you're not really required to have it. If you have separate locations, you have multiple locations, they all have to be listed. If there's an employee on site at a location, you should have that location listed. I think about the only time that you wouldn't have to is if you're, like, for instance, like a contractor that's going to multiple locations doing repairs and or something like that, where you're not there on a permanent, full-time or part-time basis, then it's really not required. But other than that, if you have a property management company, for instance, that's managing homeowners associations or even apartments, it would be the same difference. If you have an employee on site at an apartment or a homeowners association, you have to list that location.
Okay, that makes sense. And so I think you've defined that really well. So anybody, if they're going part-time to a location, that should be listed.
That should be
that location.
Anytime you have anybody there on a regular basis, then yes.
Okay, that makes sense. And is there a limitation to how many locations can be added?
No limitation as far as that goes. It's just if there's an employee on site at a location, you list it.
Okay, that makes sense. Okay, so let's go on to our next slide. And by the way, again, if anybody has any questions, please chat them in on anything that we're talking about, and we will stop and answer them for you. So next, let's talk about executive officers and owners. This has, it used to be somewhat easy to exclude owners, and then there was a lot of regulation passed and changes made, and then even more changes made that made this rather complicated and potentially costly. So can you exclude owners, Caesar?
Yes, you can. There's been a lot of headaches for the last couple of years when it comes to officers, excluding officers and things like that. But yes, you can be excluded as long as you have a minimum 10% ownership in a corporation, LLC, or partnership. Then you can be excluded from coverage. Anything below that, there is no option, and you will be included for coverage.
So the question, who is required to participate, that's who would have to be added in their payroll, included in the work comp policy, correct?
Exactly, right.
Okay. And you mentioned LLCs, corporations, and sole proprietors are probably the key.
Sole proprietors as well, types. But they are typically automatically excluded from coverage anyway. So that you have that whole waiver form that's been around for a few years now. That it's really limited to corporations, professional corporations, partnerships, and LLCs. You have to have that waiver signed in order to exclude yourself from coverage. Otherwise, if you don't have that signed waiver, then you'll get included anyway. So you have to have a waiver to exclude yourself, but there's also that thing about having to be a 10% owner in said company or corporation or LLC entity. But yeah, it's I lost my train of thought here, but yeah.
And what about executive officers? They may not be a shareholder. They may not have any ownership, but they're an officer of the corporation.
Yeah, they really don't have a chance to get excluded from coverage, so they would be included because they are drawing a payroll. They have no ownership in the corporation, so typically they would be included for coverage.
How do they establish a class code for these owners and executive officers that are included?
It really depends on what they're doing. Typically, an auditor will go by the governing class. So if it's say a restaurant and the corporate, you have corporation, you have two officers, a president, vice president, and if they're included, they're going to be classified as restaurant operations as well. About the only time that you can is if you can prove that they are basically clerical only. Then you can probably classify them under clerical. But if they are managing the restaurant, things like that, typically there's no option to put them anywhere else other than the governing class.
Okay, that makes sense. Good information. So what about making a mistake cost the insured premium with exclusion or inclusion?
Definitely, yes. Again, it goes back to that waiver form that I was talking about earlier. If a form is not signed and sent into the carrier when you bind a policy, they will automatically be included. Now, you can exclude them at any point during that policy period, but it goes from the date that they receive that waiver moving forward. You cannot backdate it. It's just impossible, and it's not allowed to be able to backdate that exclusion to the inception date of the policy. So you'd if there was a mistake and you catch it early, then yes, you can correct that mistake, but there would still be a little bit of a consequence in that they would be paying that additional premium for the time that they were being included.
Okay, and so I would probably. Would you agree that changing carriers, being new in business, is where this this is where you really have to pay attention to this?
Definitely. Anytime we're renewing a policy and we offer a quote with a different carrier and we end up binding with a different carrier, that form has to be signed. Uh, Probably, I would go as far as even say, even if you're renewing with the same carrier, you'd want to get that waiver form anyway. It may be a little more inconvenient, but at the same time, if there's a change in ownership that happens, maybe not with all of the owners, but if you had one owner pull out of a partnership or a corporation, and then somebody else came in, then you have to have that waiver form signed. You'd have to report the change in ownership as far as that goes. So then you'd have to have that waiver signed and reported back to the carrier.
Thank you, Caesar. Well, let's move to our next slide. So let's talk about multiple state coverage. I remember years ago that most carriers didn't even have the ability they had to write separate policies per state. Now, I'm dating myself on that. How do you handle business now that has a multi-state exposure, Caesar?
Most carriers now will write multiple states on the same policy, so it's typically not a huge deal as long as they're writing in that state. And sometimes they'll have authority in filing to be able to write in additional states as long as you're. Usually, it's for example, like a neighboring state. They'll be able to write for a neighboring state. But there's carriers that won't do anything beyond that. But for the most part, yes, you will be able to write them on the same policy and not have to write separate policies for each state that you're writing in. But as long as they're licensed in that state and you're licensed in that state, there is no problem.
Is there a dominant, like, do they choose a state of domicile when you've got that multi-state exposure, possibly where there's more payroll, or it just gets listed out on the policy by state, and then class codes by payroll?
Yeah, it gets listed out by state, so it's everything is separated out by state. It really, as far as the domiciled state, that's the carrier's I guess you would say preference, if they want to write multi-state and if they want to write all across the country, or if they are just willing to do neighboring states.
And I might have I did not heard you, but did you talk about the if any state, or if?
No, I didn't. Well,
that's automatically included. Wait, would you say? Sorry, I might have the wrong term.
No. Okay, no. Now you're talking about the other states' coverage on the policy. That would be if that's a little bit different, because the policy does cover for employees in your policy in your state. Say if you're writing a policy in California and you have somebody that travels to Texas for a conference, they're still covered because it's not on a permanent basis. If something happened while they were out of the state, but it's not for permanent employees outside of the state. That would be a little bit different. That's where you would want to write that specific state and payroll for that location in that state.
Thank you for clarifying that. That was helpful. Okay, so let's talk about family members as employees. This, I remember this has been an issue for many years, and I think there's been some changes. And we're going to ask Caesar to help us get a little clearer on what defines a family member, and then how do they get addressed on a work comp policy.
Yeah, when you're talking about, say, a sole proprietor or individual owner, that's when you're going to see a lot of family members potentially working with you at the company. They may not necessarily draw a payroll, but if you're talking about a corporation, LLC, anything like that, if it's a family member, they have to have ownership in order to be excluded. The only time that they can be excluded is if they are like I said, Underwriter entity, then there's a little bit more option for them to be excluded. The carrier may require something in writing saying that they are a family member that they would like to be excluded, and it has to be an immediate family member, like a spouse, mother, daughter, son, something like that, and they have to live in the same home. If they don't live in the same home, then that option is out the window, and then you'd have to have coverage for them.
So on a sole proprietor, is there anything tied to whether they're receiving payroll or not? A family member?
I think it depends on who you ask. I've heard it both ways, but
from the carriers?
Yeah, from the carriers. So sometimes I don't think they're very clear on it. But yes, typically if they're drawing payroll, I think most carriers are more comfortable if you're writing a policy that includes them. But it's not necessarily needed. But like I said, if you have something in writing saying that it is an immediate family member, you might be able to get away with it.
Got it. Okay. Interesting.
It's just a big gray area, to tell you the truth. The more that I've talked to the carriers and their underwriters and things like that, it's
there's some wiggle room there. It sounds like
it is, yeah.
By carrier. Okay, wonderful. Well, let's move to our next slide, which is seasonal and leased employees. I think that's a question that comes up all the time. How do I handle seasonal employees, and who is considered a seasonal employee, Caesar?
I see it a lot. We write a lot of homeowners associations, and I see that a lot with the summer months where they are trying to hire part-time employees to do pool monitoring or recreational areas where they want to have monitors for the pool or anything like that. Most of the time they ask if they can just write a 2-month policy or a 3-month policy to cover those summer months only. But I don't suggest that happen. It'd be better if you're just writing the full annual policy. It's really difficult to go back to a carrier, 3 months of a policy, and then you're telling them that they have a gap in coverage for 9 months, and then they want to have coverage again. It's difficult for them to wrap their minds around that, and they're thinking that it's either a gap or a lapse in coverage, and they're more likely to not want to write a policy like that. And you have a scenario where you may end up having payroll for a little bit longer than that, or you have you end up wanting to hire somebody for something else. You already have that policy in place, and you don't have to mess with it. It's not going to cost you any more than you would have already paid for that 2 or 3 months of payroll, because it's rated on payroll. The premium is based on how much payroll you're reporting versus anything else. That it's not like a flat fee. You have a minimum premium, but typically you're going to go over that minimum premium anyway, and it's all rated on that payroll anyway. So if you had $25,000 in payroll for 3 months or for the year, it's still going to be the same amount of payroll.
Okay.
Premium, sorry.
Thank you for that. So this is one that I actually added on here, Caesar, because I think that there's always a surprise when and most insureds don't tell our retail brokers when they've decided to add a PEO and what effect it has on the existing work comp policy. Do you want to just give a brief explanation of that?
Yeah, when you go to a PEO, you've pretty much effectively lost control of your employees at that point, and they're no longer your employees. It's very difficult.
There would be no need for a work comp policy, is what you're saying.
There would be no need, right? There would be no need.
The policy would be canceled because they would be covered elsewhere.
Exactly, and you can't have it both ways. I've actually seen companies that want to write with a PEO, but they also want to keep their work comp policy and certain employees on a standard work comp policy. And you cannot do that. it doesn't work, and no carrier actually goes for that. So it has to be either the PEO or not. So yeah, you just lose a lot of control over the account when that happens.
Right. Okay. Thank you, Caesar. All right. Delivery employees. Well, this has historically been a problem and sort of a no coverage. Will not write by most carriers because of the back in the days. Pizza delivery sort of had a catastrophe of injuries, accidents, and so sort of shut it down for umpteen years. So tell us what's going on now with pizza delivery.
It's they are softening up to the idea of pizza delivery to the point where we can now write that, and it's not really a problem now. I think it was before because certain company would promise a delivery in a very short amount of time, and you were trying to get a pizza delivered in that time, and everybody was rushing and driving and getting into accidents and things like that. But that's not really the case anymore, and you're seeing a lot more open minds about delivery in general, but pizza in particular, that has been the last holdout, I think, where most carriers wanted to just limit it to some delivery as long as it wasn't pizza delivery. Now we can do that. We have a carrier that can write and wants to write pizza delivery. So it's
send in your pizza delivery.
Definitely, it's much easier to do it now. So
submissions, yes. Send them in to Caesar. He can take care of you on that. All right. So our last slide is class of business. And what I wanted to ask Caesar to take a couple of minutes to talk about our appetite. But before we do that, I'm going to throw a couple of questions out to everyone. And for those of you that are willing, I'd like to have you start typing in some questions relative to types of risks that you're looking to place. Are you having trouble placing any new ventures? And do you cross-sell your package business for work comp? So if you want to address any parts of this in an email, we'd like to, address any questions you might have relative to that, or and then while you're doing that, we'll have Caesar talk a little bit about how broad his appetite for classes of business for work comp.
Yeah, thank you. As as we keep moving forward, we keep broadening our appetite. We're getting new markets coming in, and with the intent that we broaden our appetites even more, and that goes to new business, new ventures, harder to place business, and the lapses or gaps in coverage. Some of our markets are finally a little bit more open to that lapse in coverage, with given a good explanation. We're not just going to write a lapse in coverage just because, but if it's the right reason, we'll definitely take a look at it and write it. But yeah, we're really able to write a lot of things we weren't able to in the past. And we were talking about artisan contractors, still staying away from roofers and tree trimmers and things like that, but a lot more opportunity to be able to write artisan contractors, short haul trucking, janitorial, convenience stores has been really nice. That was for the last couple of years, because before that was a very difficult type of business to write. Just convenience stores in general were just a big no. But we have a great carrier that really likes to write them and is really going after them. So we're willing to write those all day.
Wonderful.
Hotels.
And you're good with new ventures as well. I mean, I don't
Definitely.
think
and even in those classes that I've named, most of those, they are willing to look at those new ventures as well.
Wonderful. And what are some of the problems, or Caesar, do you see the cross-sell factor affecting, being a problem with retention for retail brokers?
Definitely. If you don't, you really got to watch and really sell the other lines of business as well. You want to have as much control over that policy as you can, or that account as you can, because you don't want to lose it to the competition. If you're not writing the work comp currently, someone else is going to write it, and then there goes whatever policy you had. And vice versa.
Right.
So yes, definitely cross-selling and being able to write multiple lines of business with the same insured is definitely a big plus.
Great. Well, thank you so much. We really I appreciate the time that you took, Caesar, to answer all of these questions, because you're so knowledgeable on work comp, and you are a great source for all of our retail brokers to come for assistance in getting a quote on work comp. So let me hit our last page here. And again, thank you all for joining us. If you have any questions, chat them in. Send over your work comp applications to submissions at CID. You can copy Caesar at the same time, so he knows it's coming in. And Caesar is your guy for all your new business needs, and we look forward to doing business with you. We will be sending out this recording so that you can listen to it again or have someone else in the office. It will also be up on our website. So again, thank you all for attending. Have a great day.
Thank you.